What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, we're going to be doing a highly requested topic. We're going to be talking about trading the S&P 500 for a living. Is it possible? How do you go about doing it? And is index trading something that is sustainable? All right. So if you're ready, let's step straight into the war zone. All right. So first and foremost, let me throw your names up on the screen. Let me know where you're tuning in from tonight, and let me show you some love, and then we will get in straight to the lesson. All right, so we have boom, Blue Razors from Kentucky. What's going on, brother? Trent from Michigan. What's going on? Leslie from Wyoming. What's going on? Margot from Minnesota. What's going on? John from Lakewood. What's going on? Andre from Arizona. What's going on? Vasant from New York. What's going on, brother? KB from Denver. What's going on, brother? Rayan from Florida. What's up? And Mark from Sacramento. All right, let me just do one more. Let's do one more person here, and then let's continue. We got Greg from New York City. Welcome, Greg. Thank you for being here. All right. So let's talk about this in detail. And let's start from the basics. So first of all, why would you want to trade SPY or indexes in general? Well, if you guys are not familiar, the indexes like the SPY and the QQQ, they represent basically a basket of stocks, right? So if I go right here, I'm actually going to pull this up. I'm going to go to the SPY holdings and let's see if we can find some stuff here just so I can show you guys some of the education behind this. All right. So look here, I'm on Yahoo Finance. Here's SPY. So blah, 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 all of this, right? And then you could see the top 10 holdings right here: Apple, Microsoft, Amazon, Facebook, Google, Berkshire, Tesla, Nvidia, JP Morgan Chase, right? So what you're looking at here, guys, is when you're trading the index, you're basically diversifying yourself, right? We're using the 500 largest stocks in the US, right? That's why we call them S&P 500, Standards and Poor 500, right? Same thing with the Qs, is just mostly tech focused. So let me ask you guys a question just off the bat. So do you think trading an index allows you to be more diversified or less diversified? Hit me with the 1 if you think more diversified. Hit me with the 2 if less diversified. So right off the bat, one of the biggest risks with trading any single ticker by itself is fraud, earnings, etc. But when you trade a basket like the S&P 500, you're essentially giving yourself more diversity because you're trading a small portion of each one of these names, right? So that way you're kind of diversifying and you're mitigating risk. Okay. So the other thing right here, guys, is the great liquidity with SPY and the spreads. So if you're specifically an options trader, guys, if you're an options trader, what you'll notice is the spread between the bid and ask for SPY calls or puts are generally small. Okay, they're a few cents generally compared to other stocks. If we start going down the list, like I have some here, McDonald's, let's say Pepsi, like some of these are less liquid. And because they're less liquid, sometimes we can have significant spreads. And what that causes is inefficient markets, inefficient liquidity. And because of that, you could be buying and selling at poor prices. All right. So trading SPY or trading indexes in general is great because that spread is tiny, it's liquid, and we are diversified. Okay. So now, how do we actually go about trading it? So there's 3 instruments that I primarily use for trading SPY. Okay. So there's futures, options, and shares. So I did a mini course on futures, but essentially what futures are: very high leveraged, 24 hours access, 5 days a week to trading the S&P 500. All right. And what that does is it allows you to actually be in and out of the market whenever you want, right? So let me go ahead and pull up the futures chart right now. So as you guys know, I was very, very heavily involved in futures. I still am, right? I've traded futures a long, long time. This is where I got started. So if I go here to the 5-minute chart, we'll see right now, look, MES, which is the micro future contracts, is live. So we are live right here. Okay. By the way, look, we had a nice inside bar breakdown, another one here, and a Nirvana right here for a nice winner. So beautiful, right? So it's live right now. So this is what I'm saying with the liquidity, right? If you're trading a stock, you're not going to get access after hours, guys. You're not going to be able to get in and out. And that's what makes futures very, very attractive, is the fact that you can be trading it right now, right? You could actually, let's say you took this Nirvana pattern right here, you sold it for a few points and you went to bed and you're done for the week. You can do stuff like that. And yes, futures also have tax benefits. They're taxed at a special rate compared to stocks. So there we go. So that's futures. So let's go to the bigger contract. So ES is the bigger contract. The bigger contract, the way it trades is every point is going to be $50. Okay, every point is going to be $50. All right. So if we could use this measuring tool here, let's just say we took this inside bar short. Let's say we came away with about 6 points. So that's going to be $300 for one contract. The only difference with MES, okay, so MES is just 1/10 of that. So every point you see here on MES is $5. So the biggest advantage of futures is that 24-hour access, essentially. The biggest downfall is the heavy margin requirements, and margin cuts both ways, right? If you're doing really well, you can make a lot. If you're doing really bad, you can get margin called, you can get liquidated. And I've been in both situations, okay? I've been in both situations. I've been liquidated on futures before. I made a lot of money on futures as well. I've taken MES contracts in 2019. I took them from about $5,000. I had about 4 or 5 of them, and then I got all the way up to about $85,000 within a year. So it's a double-edged sword, definitely, guys. But it's available. Okay, so that's the most important thing. Know it's available. So options. So options are great because options have a limited downside and unlimited upside. In theory, right? With options, guys, give me one sec. With options, if you're trading naked options like calls and puts, whatever you put in, that's what you can lose, right? So if you buy $500 if you do $500 worth of calls, right? That's in theory all you can lose. Okay, so we're just talking about straight calls and puts here. And shares, main benefit with shares is very similar to futures, but shares you don't have access after hours. And shares, I would say, require a lot of margin as well, which is kind of a downside. So we have futures, options, and shares. The good thing with shares is like you can own the shares and you can hold them indefinitely, and you can be an owner of the S&P 500. Whereas futures, it's almost like you're borrowing those contracts. It's a little bit different. Okay, so just as a quick poll here, hit me with a 1 if you've traded futures. Hit me with a 2 if you traded options. Hit me with a 3 if you've traded shares, and hit me with a 4 if you've traded multiple. If you trade like both of them before. Okay, let's do a little poll here. So 1 for futures, 2 for options, 3 for shares, and 4 if you've done a combination. All right. So one thing I will say, guys. So I did do a futures video a long time ago. I was going to continue it, but let me just pull it up. Trading Wars Futures. All right. So I'm just going to pull it up just to show you guys. So here we go. This is the futures video. I'm just going to link it in the chat right now. So if you're interested in trading futures, and I did a really detailed video here, so take a look, okay? But essentially, guys, going back to what I was saying, they all have different benefits, pros and cons. Futures, if you're trading the micro contracts, you could get away with trading very little capital, like $1,000 or $2,000, risking $5 per point. If you're trading options, again, you can go ahead and have small risk as well, because let's say you buy one contract for $400 or whatever, that's your risk. With shares, guys, you're going to need a lot of margin. So you definitely need significant capital to get that done. So I would say the more efficient ways of trading SPY are futures and the options. Okay, shares, they still work. They're a little bit inefficient, though. I will say that. All right. So now we've talked about the benefits of SPY, right? It's diversified, it's liquid, the spreads are great. We have access to the market after hours with futures. We could be trading at any time. There's a lot of people I trained over the years in Singapore, in the UK. that take advantage of trading in their time zone, right? So like they might wake up and it might be 8 p.m. So they're not going to have access to the New York Stock Exchange, right? But they're going to be able to trade the futures contracts, right? So that's, a benefit. And it's also a double-edged sword, I'll be honest, because you can become like severely, over trading and just staring at the chart all day, all night. I used to do that. So I'm just sharing based on my experience. So nowadays I like doing a combination of stocks and the index just to ease the mental part of the game, just having that mental cushion, knowing that you're diversified. Like if Apple runs like last week, for example, I'm in it, right? FOMO is one of the biggest things that you have to battle as a trader. All right. And you need to find ways to deal with that on a mental perspective. So before we go into actually trading it on a daily basis, just hit me with a one real quick if you're following me so far. The other thing that I will say about SPY, guys, is as we do these reviews, you'll start to see, but SPY is very rhythmic. It's very algorithm based. It is, one of the most heavily traded markets in the world. So because of that, it brings into a lot of algorithms, a lot of robot trading. You'll see that things like this right here, guys, high and low, like this, Fibonacci's on the 786 and all that. You'll see that the Fibonacci's, guys, play a big role in SPY, a very significant role. And that's why I wrote my first book about fibs, because it came from SPY, because I used to only trade SPY, only used to trade futures. But right here, guys, that is an edge, I would say, on SPY, because it's a little bit more predictable in a sense, more clean. All right. And I would say that SPY is generally more clean than the Qs in terms of trading measured moves, trading to extensions, a lot of less false wicks and huge things like that, guys. From my experience, that's what I've been able to find. All right, thank you. All right, so let's move on. So what do you need? So obviously, guys, you need a profitable trading system. Very simple. I mean, you can trade anything for a living. The main reason we would want to trade SPY, again, is like what we said. We want liquidity. We want to be able to get in and out. We want to be able to trade basically 24 hours a day if we choose to. So futures is the only thing that we could do that on, right? We want good spreads if we're trading options. And we just want something that we can master over time, something that's a little bit more analytical, something that's a little bit more predictable. And SPY, because it's such a liquid instrument, has repeatable patterns. So now when we go into the trading systems, guys, I'm going to do a detailed review on kind of my style and to share some ideas and tips with you guys. I have a lot of different ways that I trade, but what it really comes down to being consistently profitable, especially in these, is focus and execution. And you need to know your time frame. So are you swing trading, day trading, or investing? A lot of the times, guys, if you overlap these without structured plans is when you're going to lose money. So like a day trade that went bad, then becomes a swing, then becomes an investment. All of a sudden, you're in the bag for a big loss. I know you guys have been there. I've been there, right? And that is what can really hurt your account. So you need to have different focuses, different trading styles, or you pick one of them and stick with it. Okay. And we can talk about the different strategies that I use for each one. And then, yeah, I already told you my story about the MES, and let's step into my review. Like, so the best way that I could show you is based on my trading, what we did in the room, what we did in the SPY room, guys. That's the best way that I could show you right here. So I'm gonna go to the SPY room here, and we're gonna review everything so that we can look at it together. All right. So let's go here right off the bat. All right. So we have Monday. So I'm just going to mark up this chart, guys. I'm just going to take my time and I'm going to go through it step by step, what we called out in the room and everything, just to show you guys if it's reasonable to actually do this for a living, to do SPY every single day. Let's see. So right off the bat, the tools that you want to have, guys, on a daily basis is you should always have two lines on your chart, right? So the previous day's high and low, very important because you need to see where you open. For me, my trading strategies are always based on where we open. So where we open, if we open above the range, if we open below the range, if we open in the range, it's going to lead me to using different trading strategies because all three of those scenarios have a different personality. If we gap up like this, guys, think about this, right? We gap up here, guys. We had a big run from the Friday. This is the Monday. We gap up. A lot of people were in this double bottom. A lot of people were buying dips. We gap up. Okay, there's going to be profit taking. There's going to be trap bears. There's a lot of moving factors in place here. All right, so right off the bat, the first trade that we called out. So I'm going to go ahead here to the 15th. Let me get the trading plan. So there's always going to be a trigger, and then there's going to be like different on the fly setups, right? So right off the bat here, guys, we had the opening range breakout. So anytime we're going to gap up above the previous day's high like this, I'm going to look at the opening range breakout. So you can see right here, guys, the first 5-minute bar had wicks on both sides. Then we came with this inside bar. So this inside bar was the continuation of the opening range breakout, guys. So just getting short right here. Okay, so this was the first one of the first plays we took in the room. So I talk about all of the setups, guys, right here. Okay, so every morning I'm in here for about an hour, 2 hours. We talk through all the setups, give live callouts, etc. So right here, guys, first 5-minute inside bar, beautiful play right here, taking that breakdown there, boom, boom, stop above the high. Absolutely beautiful bar. Look at this, bam, right? So the way that we do scaling out is very simple. So I'm going to show you guys here. Try to take a bar by bar approach. So let's say you short this inside bar here, guys. When we start getting into 1-to-1, you want to start scaling out. Okay, 2 to 1.5, 2, 3, 4, 5, 6. So we just take it a bar by bar approach, and then we start using these trailing stops. Okay, so that was the first play. Beautiful winner. Okay, this white line right here, I'm going to bring this down. So our trigger was right around, let me fix this. Our trigger was right around here, guys. Okay, so let me pull up the trigger actually so we can write it down together. So our long entry was 467.49. So I'm going to go ahead and put that in here for you guys. 467.49. I was right. All right, now check this out. So the low of this candle, guys, was 467.50. All right, so 467.50. So when I do trigger trades, guys, I use something called stop limit orders. What stop limit orders are essentially I add 3 cents on my position. So basically, I had a range to fill me from 467.49 to 467.52. And I got filled on this bar right here. So when this low came in here, guys, I got filled. All right. And then at the time, I obviously thought I was a genius, right? I thought I was a genius. I was like, all right, I caught the low of the day. I'm about to tweet about this, etc. But once we started coming around here, guys, and we had this holy grail. So this is a holy grail, outside followed by inside. This is when this yellow light comes down, guys. So this is a part of my free indicators. Make sure you have them on your chart. Once this holy grail came in, guys, I put the stop loss to break even because I saw that we were losing steam, and boom, we got the break even. We're good to go. All right. So right off the bat, we had this inside bar was a winner. We had, so which was a continuation of the opening range breakout. And this trigger right here, guys, I was able to get it at break even. Let me just pull it up just to show you guys. One sec. So I'm constantly muting myself because I'm coughing. So I don't want to be annoying you guys with the coughs. But let me just show you guys here. I really like to show evidence of stuff. I'm an auditor by trade, and I just really need to show you guys these things. Otherwise, my mind will not be at peace. Okay. So this is where we start talking about the opening range breakout and then all that. And then blah, blah, blah. So then right here, all targets achieved on the 5-minute inside bar. Keep some runners. Beauty. Love having you all here every day. Blah, blah, blah. Da, da, da. So then right here, check my phone and realize I got triggered long from the SPY trigger day trades. Legit caught the low of the day. Stops at a break even right now. I hope this thing can run. I really thought, guys, that I caught it. Like I literally thought that I had it here. But hey, you're not going to get them all. So stop loss at break even. Got out there. All right. So that's the recap for Monday. Keeping it very simple, guys. So we had this inside bar here, which was the big bad boy. Then we had this trigger that failed. And pretty much it, guys. I'm looking for 2 to 3 plays, maximum 5 plays per day, and then I'm done. If I have 2 winners in a row, I will call it a day and just move on. All right. So that was Monday the 15th. So just hit me with a 1 if you're following me so far. All right. So one of the things, so just to give a summary. So what I do when I'm my systems, what I'm doing, guys, is I'm doing triggers. I'm doing triggers, orb, fibs, and fractals, which are basically inside bars and outside bars, right? So that's kind of what my game plan is every day, trying to look for winners on those and then calling it. Another thing that I will point out here was there was a lot of that. Now I'm going to show you like why I'm going to show you why I mentioned SPY is very rhythmic. Okay, one sec. All right. So what we're going to do right here is I'm going to start drawing out the fibs for you guys just to show you. Okay. So right off of here, guys, the first 5-minute bar, we have this 886 rejection. Okay. Very, very important. This is what I mean by rhythmic. This is what I mean by very systematic. So first 5-minute bar, 886 rejection. Okay. That's a fib right there. Next, if I take this leg and I pull it down to the morning leg. So this is the morning leg that I talk about in my book. This is about the first half an hour. You can see we pull back to the 786. From the 786, we trade right to the 10% extension, which is one of my key zones that I always tell you guys about. We flip up temporarily and then we roll over. So now we have a sequence leg. So I'm going to take this high, bring it to this low right here. And then you can see, guys, beautiful. So this is the power of fibs. This is the power of combining the Fibonacci with the fractals, guys. This is very important. This is why I put my stop loss to break even when I took the trigger, because I saw we had this rejection here on the 50% with this holy grail. So that's why, guys, you see this white line? I put my stop to break even because I saw all that rejection. Okay, one sec. Now from there, guys, again, another sequence leg. Now, if I take it from this pivot high, bring it down to these lows over here, this little double bottom, you could see a 618 rejection, double inside bar, breakdown, beautiful. And that kind of took us into the close. All right. So those are the fibs. I'm not going to spend enormous amount of time on it because it takes some training to understand those properly. Okay. So hit me with a 2 if you're following me, and then we're going to move on to the next day. I'm not going to do every single day, guys, because I just don't want to keep you here all night. I mean, I could talk about this all day. This is what I do. But I just want to show you guys some ideas. Okay. So let's go ahead again. Let's move on to the triggers. Let's go to the next day. So the next day, the trigger was 468.55. So I posted triggers every single night for my members. Okay. 468.55. And let me get the stop. So the stop was 467.82. So I'm going to go ahead here. 467. 82. I see a question about the fibs. Check out my videos on YouTube. Essentially, you want to take the extreme high and the extreme low. Okay, so let's go. So right off the bat, guys, here is the open the next day, which was the 16th, which is Tuesday. So this white line here, guys, was our trigger for long, and this white line here was a stop. So you can see we got filled right here long, guys, and then from there we came back about halfway to the stop loss, and then we ran to all the targets and hit them. So there's a reason why I have my triggers at certain levels and I have my stop losses in certain levels. These are levels that I've back tested significantly. And because of that, because of the back testing, I'm always looking for ways to improve the entry and the stop. So I like the front run. I like to get in before breakouts. Like you could see here, guys, I front ran the entry a little bit here, and my stop loss was in a good place to allow me to stick into the trade. And then we hit all the targets on the way up. Some things we also see here, guys, is we had this inside bar here, which was a little nice scalp, another inside bar, which was a scalp. And then we had this Nirvana on the way down, which was also a great scalp. So these are for the scalpers, the really tight trades. I have some traders that take profits at like 10 or 20% real quick. And that's totally fine, guys. You just have to find what works for you. All right. But there we go. So that's a trigger. Keep that simple. Hit me with the 3 if you're following me, and then we're going to move on to the next day. All right. So the next day, guys, was just simply an inside day. So what I'm going to do here is I'm going to draw the low and I'm going to draw the high. Okay. So here we go. So right here, you could see this was the 17th of November right here. And you could see, guys, this was the high and the low. And notice how the 17th of November right here in this block, we trade completely within the previous range. Okay. So we trade completely within the previous range, guys. And this creates an inside bar. So this is where we see this inside bar on the daily. Okay. So right off the bat, guys, whenever we have an inside open like this, I don't normally take the opening range breakout. Obviously, I could look back at this first 5-minute bar and I could say in hindsight that, oh yeah, I should have taken the opening range breakout, but that's not my game, guys. I follow my rules. It is what it is. I follow my back testing. My back testing says I don't have an edge to taking the opening range breakout in the middle of the range. Even though it works in this time, guys, I'm not gonna break my rules. Okay. So here we go. Next bar right here, this inside bar, guys, beautiful. Sorry, this outside bar, beautiful one-to-one hit. One thing that I like doing with the previous day's range is I like drawing the Fibonacci from the low to the high, or the high to the low. Okay. In this case, I drew it from the low to the high because what I was looking for here, guys, was I was looking for this pullback. I was looking for this pullback. And you could see right at the open, guys, as we started pulling back down, right? As we started pulling back down, we tagged this 886 Fibonacci, guys, which is one of my secret fib levels that I love. And this is where we got in calls. I can show you guys right here in the setup alerts. See if I can find it. This is the 17th. What day is this? 17th. Okay. So here we go. Previous day's range. You can see here, took some, but getting some follow through. Now scale out here and leave some runners. So there we go, guys. So this was the dips, right? So this was me pointing it out on the chart for everybody in the room. But I love looking for those intraday fib ranges from the previous day. So that was the play right there, guys. Beautiful push up. I think the calls went for over 100%. Beautiful run. All right. So then the next day, we started off with a loser right off the bat. This was the 18th of November. I had the trigger right here, guys. Somewhere right around here was the trigger, and the trigger came right away and stopped us out. So that's going to happen. You're not going to win every trade, okay? So even though the trigger stopped us out right away, what we did have is the opening range breakout. So you can see this opening range breakout, guys. I took this one right here. Beautiful follow through. It took a little bit of time. It took a lot of patience, but did have that follow through after. And then right here, guys, I'm going to take this white line up here. This was the trigger to the short. So even though the trigger for the long failed, we had the trigger for the short that came in right after, hit the trigger, and bam, hit targets on the way down. So that was good. So sometimes you're going to start off with a loser, but you need to just be able to adapt, and you need to be able to ready to rock and roll. Okay, guys, you have to be ready to rock and roll at all times. You have to have a short-term memory when you're trading. All right. And now the last day right here, guys, which was Friday, I'm just going to walk you through. So again, I did not take the inside. I didn't take the opening range breakout because it was an inside open. What we did have instead, guys, is we had the trigger right off the bat. So let me just get that right here. So the trigger on Friday was 470.15. So I'm just going to show you. And the stop was 469.18. Let me get that right here. 470.15. 469.18. Beautiful. All right. So right off the bat here, guys, am I doing the right day? 1 second. Sorry, I think that's the wrong day. Sorry. Yeah, that's what I thought. 469.64. And yeah, I apologize for all the coughing, guys. I really do. Trust me, I'm doing my best to mute myself as much as I can. In the meantime, while I draw this up, why don't you hit me with a 5 if you're feeling good? Like, how are you feeling today? 468.61. All right. Boom. All right. Beautiful. Okay. So right off the bat here, we had the trigger that filled us at the open, guys. I honestly thought that we're going to get stopped out right away. I really did. But this is just another power just to show you like the power of my triggers, guys. I invested a lot of time and money and research to figure out these trigger levels, guys. And they're based on Fibonacci. They're based on many things, and they change month over month, quarter over quarter, depending on the context of the market, depending on the average true range. There's a lot of things that I did, guys. And that's why when I see it work like this, guys, it makes me very, very happy and very, very pleased. So we could see right here, the white line, we got filled right away on the first 5-minute bar. Right off of that, guys, big sell-off. Thought I was going to get hit. We didn't. We popped, and then we came back again, and we retested this, putting in like this little double bottom pattern. And then from there, guys, we came ahead and hit all the targets on the way up, which was beautiful. All right. We also had this inside bar and this inside bar. So we did add to the position. So when we got long on this trigger, we also got long here and also long here to add on the way up to basically have a shorter distance to the target. All right. And then right here on this push up, guys, we did take some profits. I remember. Let me pull up the room. Let me see it. Just want to show you guys as much as I can, man. I'm just really trying to be different. I don't feel like people show stuff. I feel like it's all, you know what it is. All right. So here we go. Boom. So here's the example. Patience. There we go, guys. Boom. Huge breakout, scale out. Love being here with you guys, etc. Calls, getting some follow through, start scaling out. So right here. So this is where we start. SPY 5 minutes. Get ready. Triggered long. Took some heat here. Potential inside bar setup here. Let the bar close. Right. So there we goes, guys. You know, trying my best here. And that was it. That was all she wrote. So like I said, I like to take 2 or 3 trades, hit it. If I have 2 winners in a row, sometimes I just call it, because I'm also swing trading with my stocks. So I don't want to become over leveraged. I don't want to have too much money on the table, because that can hurt me if everything goes wrong at the same time. All right. So hit me with a 7. That's the SPY recap right there, guys. We also had some swing trades. We don't have really too much time to talk about it, but it revolves around like this Nirvana pattern here, guys. We had a breakout. We hit some targets on the swings. We had some losers as well. So I'm not going to talk too much about that. That's a topic for another video. So hit me with the 7 if you like the recap. All right. Now, just to summarize, guys. So basically going back here, back to the basics with SPY, great spreads, liquidity. You could do futures, options, or shares. Futures, you have that 24-hour access. You know, I have my own SPY room, guys, because it's, I like SPY. I think it's, I have colleagues that do trade SPY for a living in this game. But you definitely need a profitable trading system, and you need to focus, execute, and you could see when I'm doing these trade here, guys, I have separate strategies for swing trades and separate strategies for day trade. So make sure you diversify them, and investing, guys, is completely different ball game. So I could do some more topics and more videos on that if you're interested, and you can let me know in the comment description after the video. All right, so there we go. The last thing that I wanted to talk about very quickly was the swing trades. So it's already 31 minutes in. I don't want to hold you here longer than you need to be. Hit me with the 8 if you're interested in looking at some of these stock swing trades from last week. So we had a total of 4 winners and 3 losers. Okay. So I'm willing to go through some of them. If you guys are interested, hit me with the 8 if you are. All right, perfect. So we start off the bat with Microsoft. Then we can look at Pepsi. We can look at as much as we can here. So let's go ahead off the bat, Microsoft. Okay. So Microsoft here. So right off the bat, guys, we had the weekly inside bar. All right. So I'm going to hit the market replay. So this is something that I pointed out on Twitter last week. We said, okay, we had the weekly inside bar. So we had the weekly inside bar, guys. And what I'm looking for here is this inside bar means that option premiums were getting hit. We went sideways for a whole week, and now we're looking for a breakout. So what I did first of all is I went to the daily chart. So this is the weekly range. You see these 2 purple lines? This is the weekly range. That's the high. That's the low. I generally get 2 weeks out for the options when I play them swing wise. Okay, so I'm still holding these Microsoft calls. So right here, guys, we had this nice little hammer. Okay, it's a red hammer near the top of the range. So what I did, guys, instead of waiting for the purple line to break, I just got in as soon as we broke this red hammer the next day. So I actually got in right here, guys. So I'm going to go ahead and show you the entry 337.51. So let me just do that here, 337.51. And the stop is 334.44. Go ahead here, 334.44. Right. So that's how I started off with the weekly chart, and I saw that we had this inside bar, and then I went down to the daily chart, and I was able to get in what I like to call front running. So can you guys let me know, what is that type of trading strategy called, guys? So this is something that I created here. What is this called? Okay, this is why I wrote the book called the drill down method, guys. So what is this strategy called? We start off with a weekly range. Okay, from the weekly range, what we do is we try to get a tight entry. We try to break it. Okay, what is this method called? So guys, this is what I call the drill down method. So we start off with the weekly chart. We have an inside bar. We drill down to the daily. And then in this case, guys, I'm taking the opening range breakout because I'm taking the breakout of the first candle. Now, just to play this over, boom. So there we are. That's where we ended on Friday. So we hit 2 times our money, guys. 2 times our money is a very important level for me. That's where I generally will lock in most of my profits, because with a 2-to-1 risk to reward, I only need to hit 34 out of 100 times in order to make money. And I still have the calls. The calls went from 245 to 555, and they expire next Friday. So hopefully some more follow through there. We shall see. Okay. So I'm going to go next on to C. So C, guys, was a straight up loser. Nothing too fancy. I'm going to go ahead here. So this white line here, guys, we took a trigger. So you can see right here, guys, on Monday, we got triggered and we got filled. And then from there, guys, we went straight down. So just took a stop loss and that was it, right? So generally, guys, with my style of trading, when it works, you will see it right away. And when it loses, you will see it right away. You know what I mean, guys? Like you'll know. Because generally when it doesn't work, you're going to get turned around and stopped out pretty quickly. And I like that because then it frees up my cash. So then I can go on to the next trade. All right. Another one I'll talk about, guys, is KHC. Might have to cut the stream early because I just can't stop coughing, guys. All right. So I'm going to go here and hit the replay. So same thing with KHC, guys. We had this inside bar that I wanted to go short on. So I went to the daily chart. And actually, a lot of people were questioning me why I wanted to take KHC short, like why I wanted to do that. And the reason is, guys, I have previous experience shorting this. So I'm always going to go where my experience is telling me to go, right? That's the one thing that I trust in trading. I trust my years of experience. And I try to ignore everything else. So here's the first daily bar. And then the second daily bar, guys, this is where I get filled. So instead of waiting, okay, guys, I'm going to show you something pretty important now. Instead, guys, of waiting for this low to break here on the weekly, I front ran it. I got in right here. So the entry was right here, 37.29. So let me go ahead and put that on here. So right here, guys, on this white line, this is when the short was triggered. Next day comes in. Okay. So on the next day here, guys, we hit the 2-to-1 risk to reward, and then we got a little bit lucky. I think there was some news, and we gapped down, and we basically hit a home run, right? So the puts right here, guys, I got the November 26, 37 puts. The win, so basically I took those from 53 cents to a high of $2.01. Yes. And yeah, definitely I am being a little bit more aggressive with my entries. This type of market is allowing me to do that. If I have to change and be a little bit more lenient, like if the market becomes very volatile, very sketchy, I will do that moving forward. All right. And just to show you guys, so I have all of these trades ready for the members. If you're interested, McDonald's, CRM, Pepsi, Uber, Texan, Ford, Oracle, Square, all ready to rock and roll for tomorrow if you're interested. All right, guys. All right. And I'm just going to wrap up here, guys, because my coughing is getting a little bit crazy. So guys, you can buy the books. If you get any one of the books, you're going to get 1 month for free in the room. There is the drill down book, and here's the options Fibonacci book. If you want to just sign up for SPY, guys, you can sign up right here. $39 a month. I think it's a pretty good price. I have live commentary every day. And then the stock room, guys, all the trades are provided in advance. All of my results are here. Definitely feel free to take a look, guys. I'm not showing the best case scenario, guys. I'm showing what I took. I think it's important for me to show you guys what I took, just because I could say every single one of these are winners, right? But that's not really what happens in trading, right? As you guys know. Okay. So there we go. 39 minutes in. Let me take a few questions and then we'll wrap it up here. All right. So hit me with your questions. Quick question. How do you pick the strikes for the underlying? So I generally I always just go 1 or 2 strikes out of the money. So whatever my entry is, 1 or 2 strikes out of the money. So basically what I'm anticipating is by time I hit my targets, okay, I will basically be in the money. Do you have SPY results? Yes, I do. I'm actually putting together my SPY book. Hit me with a 5 if you guys are really excited for the SPY book. So I'm going to be putting together a SPY book, guys. It's going to have some of these results. It's going to have some of my trading methodologies. By all means, guys, it's about education, and the books are the easiest way to educate people. So let me know if that's something you guys would like. What why your entry so early, blah, blah, blah. Is it because of risk reward? It's about my back testing. It's about me trading for so many years and putting my money on the line. There's different things that I've learned over the years. So that's why I do it that way. All right. All right, guys. So 40 minutes in. I hope this was educational. The recording will be on YouTube soon, maybe tomorrow. I don't know how long it takes to upload it. But yeah, I just really want to thank you for your time. I really appreciate you guys taking the time on Sunday. I really do. It means a lot to me to have you guys here. And I just want to keep growing. I have a lot of projects going on. I have a lot of capital under my management now. And I have to, I have to be, I have to manage my money. I have to help people. There's a lot of stuff. I have to write books. There's a lot of stuff going on. So, you know, I try my best to do these as much as I can. And I really do appreciate when you guys come out. I really do. It makes it worth it for me. Okay. So last thing I'll say is every week I try to say something, positive for the week coming. We got $2 right here from brother Clark Rodriguez. Thank you and get better. Thank you very much, brother. Appreciate that. So let me just think about something in my head. Just want to share something, guys. So there's a word called grit, and it's a very important word, guys. I was reflecting today. It's important to reflect on your life and where you've come, where you've been. Today I spent some time reflecting, guys, and uh, you know, I had to have a lot of grit in my life to get where I am. When I started off in university, I was in like this pre-program, like this pre-universal program, university program. So it was like essentially I was on probation, and like I had to get exceptional marks in order to just get into the program, because from where I was coming from, the education that I had, they didn't think I was worthy. They didn't think I fit the criteria in order to get into their big university program. It was all fancy, blah, 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 right? But I went ahead and I blew their minds, guys, and I finished with a 3.82 out of 4 GPA, guys, in all of my years in university. And I was not the smartest guy at all, by no means. The only thing that I have that a lot of people don't have is grit. That's it. And what do I mean by grit, guys? Grit means that no matter how many times you get knocked on your ass, you got to get up. No matter if you don't know something, if you don't understand something, you have to seek the answers, because nobody else is going to do it for you and nobody else cares. I'm going to be honest with you. No one cares in this world. Nobody cares. You have to have ownership for your life, and you have to have ownership for the directions that you take. At the end of the day, you want to look in the mirror, and you don't want to be the person that says, I should have done this, I should have done that, I should have done that. You don't want to be that person. All right. So that's a philosophy that I took, guys. I took a lot of risk in my life to get where I am today. And just going to keep doing it, keep going, keep pushing, keep showing grit. So thanks again for your time. I hope that inspired you guys a little bit. I appreciate all you guys, and I want to see you guys succeed. All right. Thank you very much. Have a great rest of your evening.